Hello everyone, hope you guys had an amazing weekend. Happy MLK Day. In today's video, we're going to talk about the overall stock market, what the next steps are, and I'm going to explain to you guys why I am leaning a bit short and why we're currently in IWM puts over the weekend. All right, so without further ado, let's get started with the video. So number one, we've got news coming out 8:30 a.m. Empire State Manufacturing Index at 8:30 a.m. tomorrow morning, and then we have more news Wednesday morning. A couple of data points. So Tuesday and Wednesday morning are going to be very important with very important news. Thursday, of course, we're going to continue having unemployment claims numbers. And then Friday at 10 a.m., we're going to have existing home sales numbers. So that's really it for the macro news. Earnings wise, this week is going to be very, very heavily. A lot of IWM Russell names are going to have earnings this week. So we have the financial sector. Obviously, we have Morgan Stanley, Goldman Sachs. A lot of these different banks, brokerages, economically sensitive stocks are going to have earnings this week. So that is basically why I felt comfortable holding on to. That's one of the reasons why I felt comfortable holding on to puts on the IWM specifically. So now, obviously, we also have Netflix earnings coming on Thursday as well. So now, obviously, the IWM has been leading the SPY and the NASDAQ, and it's been showing the most strength, right? But I felt very comfortable holding on to a bit of puts. Obviously, it's not the safest because the market could continue ripping upwards, but similar to what we saw on Thursday and then into Friday morning, we opened much lower, right? So we closed at around 185.75, and then we opened basically $1 or so lower. But then intraday, we ended up running up even higher. So when we look at the futures, right, on the Russell, this is the IWM futures. We saw that we opened and closed outside of the futures on, Thursday. Basically, it coincides with this candle here. Showed a lot of strength. But then Friday morning, when the market opened, we gapped lower. So now when looking back at what happened Friday morning, we ended up gapping lower, right? And the futures price, it opened outside of the Bollinger Band to the upside. Usually when that happens, it's a very, very good indication that the market is going to fall lower intraday. And that's basically what happened. And the futures were very strong. But once the session opened, the IWM itself opened inside of the Bollinger Band, but then we continued up afterward. So there's clearly a lot of strength still in the market, but it makes sense to start leaning a bit short. This sort of strength, I don't believe, can sustain itself. And it's another good sign that right now, currently on the futures, we opened outside of the futures. We opened outside of the upper level of the Bollinger Bands once again, similar to what happened on Friday. So we can see a bit of a move downwards, most likely into the IWM when the market opens. All right, there's my thought process for that. And then I want to just quickly look at the rest of the charts, why I'm leaning a bit bullish, why I'm leaning a bit bearish heading into the beginning of this week. So the SPY, obviously, we couldn't get like a solid close above this level of resistance. We could not really get a solid close above 400 is still acting as major resistance. The IWM, the leader currently, is basically like it's very, very overextended to the upside, in my opinion. So if there's ever something that you were going to do, it was either going to be lotto calls, very, very short dated calls in a small position, or the safer play, in my opinion, was to get puts. So yeah, I mean, that's my thought process for that. When taking a look at the NASDAQ, we're getting close to the upper level of the Bollinger Band here. Obviously, the NASDAQ is stronger right now relative to what the SPY is doing. But one of the main things is the dollar. So the dollar, we know that if the dollar is, it has an inverse relationship to the overall market. So if the dollar is falling, then the stock market should be doing well. But currently, we see the dollar is making a bit of a bottoming formation. We wicked. So the dollar wicked below these levels of support and then ripped up higher. So with this strength in the dollar currently, we can see if the dollar continues going up, the market should be falling. Does that make sense? So with this sort of bottoming formation here on the dollar, that's a very good indication that the market itself should start to fall a bit. All right, so it's a good sign for bears that the dollar is doing this right now. And then the other thing that I want to show is the 30-year bonds. So the 30-year bonds, this looks like a very good, technically, right? This looks like a very good shorting opportunity. We had a big wick to the upside and then followed through to the downside. So, and we also know that if the bonds are showing weakness, basically the bonds in the stock market have a correlated relationship. So if the bonds are doing well, then the stock market should also be doing well. But of course, you know, it's not as clean with the bonds, but you know, as long as the bonds don't show extreme strength, then this sort of stagnation in the bonds can lead to more weakness in the stock market as well, coupled with the fact that the IWM names are going to have earnings this week, coupled with the strength in the dollar. And the other thing that one of the other main important things that I want to show you guys are the international markets. So the international markets definitely do not look like they are continuing to have a lot of strength. Okay, so this is the German markets. This is clearly not the same as big green red candles, or big green candles to the upside. These are stagnation candles. And these are just dojis at the top. These aren't like strong candles, right? So when you're looking at the Japanese market, obviously the Japanese market isn't doing too well. The UK market, very similar. We're not having a huge, you know, we're not having huge green days either. Things are still stagnating. And of course with the Chinese market as well, things are not as strong to the upside. These are still technically, all of these things look like potential reversal signals at the top. That's my whole point. So the German markets, the UK markets, and the Chinese markets all look very, very like toppy. And the bonds also look like we can continue falling lower. The dollar looks like it's creating a bit of a short-term bottom. So all of these different things combined with the fact that the IWM stocks are going to have earnings this week is a good enough indication to basically be short. And if it doesn't work out, it doesn't work out. But it's a very high likelihood chance that we should get some sort of a move to the downside. I'd be very, very surprised if we gap up. But most likely what's going to end up happening is any sort of move to the downside we have. I'm not even necessarily saying that we should have a huge move to the downside. But any move to the downside we have can be bought up. So, you know, it's very important to take that into consideration. Also, another thing that I want to show you guys very quickly is the various uptrends that are being made on all of these different ETFs. So basically, the NASDAQ is in an uptrend. And if we close below this uptrend, heading into Tuesday, this level is going to be around 280. If we close below 280 on Tuesday, then this could have another day of follow-throughs to the downside. For the IWM has two uptrends. One is a very, very extreme uptrend, but what I'm basically doing is I'm connecting the lows of these moves here. So obviously one of the uptrends breaks at around 182, 183. I doubt that's going to happen tomorrow. But the more extreme one for Tuesday is going to be around 186.50. So if we get a close below 186.50, then we can get another downside move heading into Wednesday. And I think that is what most likely should end up happening. But all eyes are going to be on these uptrends. And then one of the easiest trades is just going to be if we get a break and close below. Basically, if we show that we can't sustain above these uptrends, then if we get a close below, that would mean that the buyers are going to want to wait for a better opportunity to buy at a lower price. To buy at a lower price closer to another level of support. And that means that the extreme buying pressure is not sustainable. If we stay within this uptrend, then yeah, we can, the buying pressure is going to continue to be sustainable. But one of the easiest trades is simply just going to be if we get a close below one of these trend lines, it's going to be very, very easy for us to basically go short. We took early shorts. We bought shorts at the close on Friday. But now, heading into Tuesday, if we get a close below this uptrend, it'll be another pretty solid opportunity, in my opinion. Also, this is not even including the weakness that we see out of the VIX. So we know that the VIX has an inverse relationship to the overall market as well. So we currently see that the VIX is trading very overextended outside of the lower level of the Bollinger Band. So we know that if the VIX is falling, generally that means that the stock market is going up. But this sort of overextension to the downside on the VIX doesn't sustain itself. So usually what ends up happening is we get a bounce back within the Bollinger Band. Okay, so with this bounce back that we're going to have in the VIX to the upside, right? As the VIX bounces to the upside and turns green, the stock market should be falling. So we have the dollar showing a reversal. We have extreme weakness in the VIX. We have the bonds showing a bit of a topping formation. We have all of these international stocks showing it into all of these international markets showing topping formations. And we have earnings coming out this week for like the financial sector and economically sensitive stocks. Not even including the fact that the crude oil futures currently are red as well. So there is a lot of good signs for this move to happen down, in my opinion. So time will tell. Let's see what happens. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. I hope you guys learned something. I hope I could help. And thank you guys so much. I will see you guys bright and early tomorrow morning.